Hello everyone, I am Pratap here. We are at lesson 14, decision making table. So in this lesson, we will discuss about a bullish trade setup and bearish trade setup based on price direction, trend and location. If this is your first video, please understand this lesson is having dependency on earlier lessons. And all the earlier lessons can be accessible from our YouTube channel. So please visit NeoStock YouTube channel, click on the home page, scroll down to the playlist Supply Demand Zone Price Action course. So click on this playlist. All the earlier lessons are available under this playlist, starting from lesson 1.1, 1.2, 1.3, lesson 2, lesson 3, until the most recent lesson. You please complete and then get into the lesson. Even the upcoming lessons also will be available under this playlist. I'm also provided the links to all these lessons at our Telegram channel. And the link to this playlist and also the link to the Telegram channel is also available in this YouTube video description. You can also directly access those links. So please complete all these lessons and then get into lesson 14. So previously we discussed about the price direction. If you look into this diagram, this diagram is having a HTF demand zone and also having HTF supply zone. Earlier lessons we already learned the location. The another name for the location is a curve. So we can divide this entire area, that is a distal line of the demand zone to the distal line of the supply zone, we can divide into three parts. One part we named as buyer's area, that is low on curve, and another part is seller's area, that is high on curve, and in between buyer's area and seller's area we have equilibrium. This is what we learned. And low on the curve and equilibrium area is favorable to the buyers. That means favorable for long trades. And also we learned high on the curve and equilibrium area both are also favorable to the short trades. So this is what we learned earlier. But also you should understand trend also should be in our favor, because we already learned trend is our friend until the end when there is a bend. This is what we learned during our trend discussions. So always we have to be trade in favor of the trend. We should not trade against the trend. And the last lesson we also learned price direction. Always our trade should be in favor of the price direction. Trading against the price direction always leads to some higher risk in our trades. So that is the reason why we all should understand location should be in our favor, trend should be in our favor, and price direction also should be in our favor. So all these scenarios, by mixing all these three concepts, and let us define a decision making table. The table should tell us in which situation we should trade and which situation we should not trade. And if you want to trade, you should trade long trades or you should go for short trades. All these things we will understand with the help of the decision making table. So to understand the decision making table, first we need to understand certain scenarios. For example, if you look into this chart, let us assume the current trend is uptrend. And also you are seeing the price movement here. So currently the price is moving from HTF demand zone to and HTF supply zone. That's why price direction is HTF demand zone to HTF supply zone. When prices are moving from HTF demand zone to HTF supply zone during the uptrend, because always we have to trade in favor of the uptrend. Uptrend always supports long trades. Okay, HTF demand zone to HTF supply zone also supports long trades. Okay, so that means trend is supporting and our price direction is also supporting. Let us assume your lower time frame zone. Your lower time frame zone is also called as entry zone. Suppose your entry zone, that is demand zone. Let us assume your entry demand zone is within this low on the curve area. If it is within the low on the curve area, can we go for a long trade? Yes, we can go for a long trade. The reason is uptrend is supporting the long trade and the HTF price direction demand zone to supply zone is also supporting the long trade. So that means within the low on the curve area, we can accept long trades at LTF time frame. You should not forget that point. Always we take trades at the LTF time frame, that is lower time frame. You should not forget that point. So whenever I say trade, always you should remember the trade is on LTF time frame, not HTF or not on ITF. And HTF and ITF you will be using for identifying the trend and identifying the price directions, not for the trades. Trade is always on lower time frame. Okay. So we are assuming our lower time frame demand zone is within the low on the curve. We can take the trade because trend is in our favor and HTF price direction is also in our favor. Okay, now let us assume that currently our lower time frame demand zone is at equilibrium. Lower time frame demand zone is at equilibrium. Now can we take the trade? Yes, we can take the trade. The reason is trend is in our favor and price direction, HTF price direction is also in our favor. Okay, now next third scenario. So far we discussed two scenarios. One is our LTF demand zone is low on the curve. Second scenario, our LTF demand zone is at equilibrium. Now let us discuss the third scenario. The third scenario is, let us assume our LTF demand zone is at high on the curve. Can we take the trade? So here, trend is in our favor and even price direction is also in our favor. But what about the curve? It is seller's location. Can we take long trades in seller's location? The answer is yes. We can take long trades. We can take long trades in seller's location because the price direction is, which price direction? HTF price direction is from demand zone to supply zone. When it is in demand zone to supply zone, if your LTF demand zone is within high on the curve, still the HTF price direction is not completed. It's not yet reached HTF supply zone. If it reached HTF supply zone, the price direction would have been changed. HTF price direction. But it is not yet reached. That's why HTF price direction is still demand zone to supply zone. That is HTF demand zone to HTF supply zone. But your lower time frame demand zone is within the high on the curve. Still you can take the trade because this price direction is not yet completed. Because some more price it has to travel to reach HTF supply zone and change its price direction now towards the HTF demand zone. So that is the reason why, because our HTF demand zone is in our favor, we can accept long trades. But we have one exceptional scenario is there here. That is what you should understand very carefully. So for that, what is that exceptional scenario? Now I am introducing the ITF price direction also. HTF price direction is in our favor. Now what happened here? Within this high on the curve, there is a ITF supply zone. Now prices entered in the ITF supply zone. And in order to reach the HTF supply zone, first this ITF supply zone has to be violated. If it is not violated, your HTF prices won't be reaching to HTF supply zone. I mean, our prices won't be reaching to HTF supply zone. So at present, what happened? Prices entered into ITF supply zone and changed the price direction. Which price direction is changed? ITF price direction is changed. HTF price direction is not changed. Please remember, HTF price direction is not changed. Only ITF price direction is changed. And in order to take a trade, you should not only look into the HTF price direction, you should also look into the ITF price direction. That is also important. We have discussed this point in our previous lesson. For supporting the long trade, not only the HTF price direction, even ITF price direction also should be supported. And moreover, ITF price direction is more important than HTF price direction. I stress this point again. ITF price direction is more important than the HTF price direction. Sometimes you can accept the trades against the HTF price direction. Even if the prices are against the HTF price direction, still you can take a trade, long trade, provide your ITF price direction supports. In which scenario you have to take, that we discuss later in this presentation. But you should never trade against the ITF price direction. I'm saying you are always, I'm saying you may take trade against the HTF price direction. But you cannot take trade against the ITF price direction. Always you have to take trade in favor of the ITF price direction. That is the reason why ITF price direction is very, very important. Okay, now can we take a long trade? Suppose somewhere here, let us assume there is a demand zone. Can we take a long trade? Your LTF demand zone is somewhere here. If prices enter into the demand zone, can we take a long trade? Because high on curve is supported, because HTF direction is still towards the supply zone. It is not yet reached the HTF supply zone. That means your HTF price direction is in your favor. So can we take a long trade? The answer is no. You cannot take long trade whether the prices are in high on the curve or equilibrium or even in low on the curve. You cannot take long trades if your ITF price direction is against to you. Trend is in your favor. Location is in your favor. Still you cannot go for long trades if your ITF price direction is against you. This is the most important statement you should remember. Okay. So that's why we cannot take long trades even in high on the curve, even in equilibrium, even in LOC if your ITF price direction is against you. Currently ITF price direction is changed. Until ITF demand zone it reaches, ITF price direction won't be changed. Or this ITF supply zone has to be violated. Okay. So hope you remember the important point you are going to learn from this example is we should never trade against the ITF price direction. ITF price direction should always support. Sometimes you may take trades against the HTF price direction, but not against the ITF price direction. Look into the next scenario. Now, situation is changed. Prices entered into the HTF supply zone. Once prices enter into the HTF supply zone, Now the price direction is changed to HTF supply zone to HTF demand zone. And high on the curve, you have to take trade if HTF price direction is between demand zone to supply zone. Of course, ITF price direction also should be in favor. At the time only you can take your trades in the high on the curve. Now high on the curve, we cannot trade because the HTF price direction is changed. Okay, now when we have to take high on the curve, when we should not take the trade. Similarly, equilibrium. Similarly, in low on the curve. So for that you need to understand curve should be used when trade against the HTF price direction should be supported. Always curve is important when you want to trade against the HTF price direction. Now HTF price direction is against. Why against? Now prices are moving from supply zone to demand zone. Which supply zone? HTF supply zone to HTF demand zone. They are moving now. So when prices are moving against you, that means against long opportunities, can we take a trade? That is what the meaning. Why we can take long trades? Because uptrend is supported. Trend is in our favor. So for that can we take a trade? Even though trend is in our favor, this area is seller's area. High on the curve is seller's area. Earlier, price direction is in our favor. That's why in seller's area we took long trades. Now, higher time frame price direction is against you now. Because now sellers are activated. Earlier, even though it is seller's area, sellers are not activated earlier. Why sellers are not activated? Because prices haven't reached to the supply zone in earlier. When sellers will be activated, once prices enter into the HTF supply zone, then sellers will be activated. They will be more active. Once they are active, the sellers area, the sellers are become very strong. Now they are in power now. So that is the reason why long trades are not accepted within high on the curve once HTF price direction is changed. Okay, now let me say prices entered into the ITF demand zone. Now ITF price direction is in our favor. HTF price direction is not in our favor, but ITF price direction is in our favor. Because ITF price direction is in our favor, can we take a long trade now? Let us assume here a LTF demand zone is there, somewhere here. In this demand zone, can we take a trade? Still, the answer is no, you cannot take a trade. Even though ITF direction is in our favor. But we are high on the curve. Location plays the major role. That is what I told you here. Curve should be used when we trade against the HTF price direction. You have to, if your curve supports, curve means location. If your location supports, then only the trade is accepted, even the ITF price direction is in our favor. ITF price direction is in our favor, but curve is not in our favor. So you cannot take trade. So that is what happened here. Your ITF price direction is in our favor, but curve, that high on the curve is not in your favor. So you cannot take the trade. But earlier, why we took trade in high on the curve? Because earlier seller's area is not activated because prices haven't entered into the supply zone. Earlier, the price direction is HTF demand zone to HTF supply zone. But now you see the difference. Now price direction is HTF supply zone to HTF demand zone. So that is the reason why curve is playing the role. Earlier curve is not having any significance. There is no role for the curve earlier when HTF demand zone to HTF supply zone, curve is not having any importance. When curve got the importance, when HTF price direction is changed from supply zone to the demand zone, now curve got the importance. So that is the reason why long trades are not supported in high on the curve, even though ITF price direction is in our favor. But HTF price direction is not in our favor. When HTF price direction is not in our favor, curve should be supported. That's why, hope you understand when you have to use curve. Curve you have to use in the against the direction of the HTF price direction. Curve should be used against the HTF price direction. Hope you got the clarity when you have to use the curve and when you need not use the curve. So again is the HTF price direction, we have to use curve. Okay. So we cannot take long trades in HTF price direction at high on the curve. Okay, next example. This is the first scenario against the HTF price direction. Let us look into the second scenario against the HTF price direction. Now let us assume prices entered into the equilibrium. Here there is a ITF demand zone. Prices entered into the ITF demand zone. Now ITF price direction is changed. Now ITF price direction is changed. Can we take a trade if there is a LTF demand zone? LTF, lower time frame demand zone, is somewhere here at this arrow mark. Let us assume. Somewhere here, let us assume there is a LTF demand zone. If prices entered into that LTF demand zone, can we take a long trade? The answer is yes. Why yes? Because equilibrium supports both long trades as well as short trades. Provide trend and location, ITF location are supported. Is trend is supported? Yes, trend is uptrend. Always we have to trade in favor of the trend, because the trend is uptrend. Always we have to go for long trades. Okay. So location is supported. What about price direction? Price direction, ITF price direction is also supported. ITF price direction always supports in this scenario, because the price direction is from ITF demand zone to ITF supply zone, because prices haven't reached ITF supply zone. So ITF price direction is in our favor, even though HTF price direction is not in our favor. Okay, why? Even though HTF price direction is not in our favor, why we are taking this trade? Because trend is supporting us. And also curve is also supporting us. And also ITF price direction is supporting. If ITF price direction supports, if curve supports, and then let me repeat again. If your ITF price direction supports, if your curve supports, and also if trend supports, if all the three supports, even though HTF price direction does not support, still you can go for the trade. That is what? Trading against the HTF price direction. Because we are trading against the HTF price direction, mainly because your trend is supported. Apart from location is supported and ITF price direction also supported. So that is the reason why I told you ITF price direction is very, very important. But the only thing that objects the ITF price direction is location. Earlier, high on the curve, we didn't accept the trades, long trades. But in equilibrium, we are accepting the long trades. And see, remember, trend should be very, very important. You cannot play against the trend in this scenario. If the trend is downtrend or sideways, you should not go for long trades at all. Okay, fine. Next, third scenario against the HTF direction. Now, prices are entered into the low on the curve, not yet reached the HTF demand zone. But there is a ITF demand zone before the HTF demand zone. prices entered into the ITF demand zone and changed the price direction. In this scenario, can we take a long trade? If prices reaches to lower time frame, that is LTF demand zone. If your LTF demand zone is somewhere at this arrow mark, let us assume, just time being assume, near to that. If prices enter into that, still you can take long trade. The reason is low on the curve always supports, even though HTF price direction is against to us. HTF price direction is against to us. Even though. Why we are going for long trades? One is the location is in our favor. Another one is the trend is in our favor. And apart from that, ITF price direction is changed now. ITF price direction is changed to ITF demand zone to ITF supply zone. When there is ITF demand zone to ITF supply zone, long trades will be enabled. But you may say, but HTF, now it is not HTF demand zone to HTF supply zone. Now it is HTF supply zone to HTF demand zone. How can we accept? The answer is location is supporting, trend is also supporting. The only scenario location did not support is at high on the curve. Because we already learned earlier lessons, equilibrium long trades are allowed. Low on the curve long trades are allowed. So long trades are enabled. And uptrend also enabled the long trends. ITF price direction also enabled the long trends. The only thing that is not in our favor is HTF price direction. But location is in our favor. Trend is in our favor. ITF price direction is in our favor. That's why all these three dominated or suppressed. This is a HTF price direction. That means HTF price direction lost by comparing with remaining all the three scenarios. That way remaining three scenarios got domination compared to the HTF direction. So remember, we can take trades against the HTF price direction only in these scenarios. Which scenarios? When equilibrium and low on the curve allowed, long trades are allowed, provide trend should be in our favor and ITF direction also in our favor. The only scenario the curve or location is dominating is high on the curve. Even though trend is in our favor, even though ITF price direction is in our favor, still we cannot take a trade because the location is not in our favor. High on the curve is not in our favor and HTF price direction is not in our favor. It is like 2:2. 2 points are in favor, 2 points are not in our favor. What are the 2 points in our favor? Trend is in our favor, ITF direction is in our favor. What are the 2 points are not in our favor? High on the curve, that is location is not in our favor and HTF direction, that is supply zone to demand zone, not in our favor. But in remaining two scenarios, we got the domination. Only HTF price direction is not in our favor. Remaining three are in our favor. What are the remaining three? Location is in our favor and ITF price direction is in our favor and also trend is in our favor. That's why equilibrium and low on the curve, the trades are accepted even though the price HTF price direction is against to us. Hope you got the clarity. Now by combining all these scenarios, now we can prepare a table that describes when we can go for long trades. Total we have 6 scenarios. In this diagram, we didn't discuss all the 6 scenarios. So let me show you in the decision making table. This is the decision making table for the long trades. So that's why because they are the long trades, I'm calling this as a bullish trade setup. So for the bullish trade setup, I am using these 6 parameters. Look into these 6 columns. First column is serial number, leave that. And the first one is HTF direction. And the second one is ITF direction. Third one is HTF trend. Generally trend we look for only ITF trend. Only ITF time frame we will be using for finding the trend. But now we are making our analysis even more strict by introducing one more time frame, that HTF. HTF also I want to consider for bullish setup so that it will be more superior. So this decision making table is going to be a very superior scenario. So I want to monitor my trend in HTF as well as ITF. Of course, ITF is the primary for identifying the trend. HTF is only secondary, that means supportive. HTF is only a supportive, but ITF is the main one, there is no doubt in that. And apart from that, location is also there. And the last column is talking about long trades. Of course, this entire column talks about long trades. Okay, let us look into the first scenario. Our currently HTF price direction is demand zone to supply zone, and ITF is also demand zone to supply zone. So it is an excellent, this is the topmost fine grade quality scenario. If HTF price direction is demand zone to supply zone, ITF price direction is also demand zone to supply zone, I can say this is a fine grade quality. In this scenario, if you find any LTF demand zones, they are excellent demand zones. That way we can consider. And the HTF trend should always be, for a bullish trade setup, always it should be either uptrend or sideways. If HTF trend is downtrend, but ITF trend is uptrend, this is a kind of ambiguity. Maybe in those zones, LTF zones, in that scenario, we can't give a good, we can't give a guarantee whether the trade will work or not. So that is the reason why we have avoided that scenario. In a bullish trade setup, at least sideways should be there, worst case. Which trend? HTF trend. See, HTF trend should be always supportive to ITF trend. So that is the reason why either it should be sideways or uptrend, but should not be downtrend. And ITF bullish trade setup, ITF trend should always be an uptrend. Otherwise it is not bullish, right? Because we should always trade in favor of the trend. So it should be always uptrend. It should not be sideways or it should not be downtrend. For a bullish trade setup, please remember. That means in all these scenarios we are going to discuss, HTF trend should always be uptrend or sideways, ITF trend should be uptrend. What about location? Here location we can ignore. Any location is accepted. We can take a trade. We can take a trade in low on the curve. You can take a trade in equilibrium, or even you can take a trade in high on the curve. In any of these scenarios, we can take the trade. So that means location we can ignore. That's why I am saying either LOC or equilibrium or HOC, anything is okay. In any of these scenarios. Which trade we can accept? Long trades. Currently bullish setup means we are talking about only long trades. And this is a perfect scenario. If you find a zone satisfying all these conditions, you can give highest priority for those zones. You may ask a question, can we take a trade in that zone? I am not saying you have to take a trade, that is eligible now. But to confirm, there are some more rules you will be learning in the coming days. If they satisfy those rules, then your trade is going to be a perfect trade. The remaining topics I am going to explain in the second phase of the training program. If they satisfy, then this is a perfect trade. Hope you understand. This is not like confirming the trade. This is our first level checking whether to accept this trade or not. If this condition is satisfied, we are accepting this trade. There are few more scenarios. If that also satisfies, then you can accept this trade. Okay, this is the first scenario. Now let us look into the second scenario. Second scenario, your HTF price direction is changed. Now instead of demand zone to supply zone, now HTF direction is changed to supply zone to demand zone. That means prices entered into your HTF supply zone area. And from there now prices are moving back towards the HTF demand zone. In that scenario, can we take long trades? If we can take long trades, in which situation we can take long trades? Okay. The situation is always to accept, see the thumb rule, never forget the thumb rule. Your ITF price direction should always be demand zone to supply zone to accept the long trades. If it is supply zone to demand zone, long trades are disabled in that scenario. It is a thumb rule, remember. So that is the reason why ITF direction should always be demand zone to supply zone. In all the scenarios, it should be demand zone to supply zone. And there is one exceptional situation is there that we will discuss. You will understand why it is not demand zone to supply zone, why something else is also acceptable. You already know, but at this point of time, that point might not have come into your mind. Actually, you know the reason. Once I told you, oh, you immediately understand, oh, how can I forget this scenario? But you already learned it. Okay, demand zone to supply zone is acceptable. What about HTF trend? Always it should be either uptrend or sideways, and ITF trend should always be uptrend for a bullish trade setup. And location. Curve plays the important. Already we learned. Curve plays the important when HTF price direction is changed. Changed means now it is from supply zone to demand zone. Long trades, demand zone to supply zone is always a favorable condition. Now long trade, supply zone to demand zone is not a favorable condition. Even then we can take long trades because ITF direction is supported. Because the HTF price direction is changed, curve plays the role, the location plays the role. That is what we already discussed in the previous slides. Okay, what curve is saying? In high on the curve, we cannot take long trades. Long trades are supported only in equilibrium and low on the curve, provide trend and ITF price direction are in our favor. So that is the reason why in the location column, we can accept long trades only in low on the curve or equilibrium. What kind of trades we are supporting? Long trades. This is the second scenario and very important scenario. Remember, because the trend is uptrend, we are taking the trades in low on the curve and equilibrium even though HTF price direction is against to us. But at the same time, ITF price direction is not against to us. Always we trade in the direction of the ITF price direction. Provide trend should be supported and location should be supported. We should not forget that point. Third scenario. Now demand zone to all-time high. There is no supply zone available for HTF. We are talking about HTF. In higher time frame, HTF, there is no supply zone. That means the price direction is demand zone to all-time high. But ITF, there is a supply zone. So when there is a supply zone, demand zone to always we have to trade in favor of the ITF price direction. Demand zone to supply zone. So it is demand zone to supply zone. This is demand zone to all-time high. Instead of supply zone, we are using the all-time high. So in this scenario, the trend should be uptrend or sideways and ITF trend should be uptrend. Now you may ask a question. Because now it is demand zone to all-time high. Now can we trade in all the three scenarios? LOC, equilibrium, high on the curve. Just think a while. The answer is no. Why no? Because here demand zone to all-time high it is moving. Here demand zone to supply zone it is moving. So why can't we take in a high on the curve? The reason is in demand zone to all-time high scenario, there is no high on the curve at all. There is no seller's area. Without a supply zone at HTF time frame, how can we identify a seller's area or seller's location? Seller's location will be there when there is a supply zone at HTF. When HTF, there is no supply zone, when there is an all-time high, we divide the entire area into two parts instead of three parts. That is what you learned in your 12th lesson, if I am not wrong. We divide the entire area into only two parts instead of three parts. One part is low on the curve and another part is high on, equilibrium. There is no high on the curve at all. So because there is no high on the curve, the remaining two parts, that is low on the curve, equilibrium, wherever your LTF demand zone is there you can accept the long trade. Because our HTF price direction is in our favor, ITF price direction is in our favor, trend is in our favor, now location is also in our favor. In all, your location doesn't play any importance in this scenario, but we are telling there are only two parts in the location. In any part, you can plan your long trade. Next, fourth scenario. Prices are moving from all-time high to demand zone. That means your HTF price direction is not in your favor. But ITF direction is in our favor. Demand zone to supply zone. ITF there is a supply zone, but now prices are at ITF demand zone. It reached and changed the price direction towards ITF supply zone. In that scenario, any low on the curve demand zone, you can take your trades, long trades, because your trend, HTF trend is in your favor, ITF trend is also in your favor. Which location you have to take? We have only two locations. There is no HOC, high on the curve, in all-time high scenarios. So we have LOC and equilibrium, both supports always long trades. And the fifth scenario, now demand zone to all-time high, but here not demand zone to supply zone. Here also demand zone to all-time high. This is what I mentioned earlier. Apart from demand zone to supply zone, there is one more scenario is there, that is demand zone to ATH. This point would not have come into your mind when we were discussing about what is the other scenario other than demand zone to supply zone. Demand zone to supply zone and demand zone to all-time high, they are alternative to each other when there is no ITF supply zone. So this demand zone is a all-time high demand zone. So that's why, because the location is, the ITF price direction is also in our favor. HTF price direction is also in our favor. And now HTF trend and ITF trend are in our favor. We have only two locations in all-time high scenarios. The low on curve or equilibrium. In either anywhere, you can take a long trade. And the last scenario, sixth scenario, now ATH to demand zone, all-time high to demand zone, but this is demand zone to all-time high. Now also, because we have only a low on curve and equilibrium, you can plan long trades. How we are planning long trades? Because here ITF price direction is in our favor. So that is the reason why earlier I told you, we always trade in favor of the ITF price direction. I told you, sometimes you may trade against the HTF price direction, but you cannot trade against the ITF price direction. So that's why you see in all the scenarios it is demand zone to supply zone, or the exceptional is demand zone. Instead of supply zone, demand zone to all-time high. See, always price direction is moving from demand zone to either supply zone or all-time high. So these six scenarios, bullish trade setup describes the bullish trade setup. So this decision making table will help you filter your stocks. In which stock you need to accept the trade, and in which stock you should not accept the trade. Because it is always in favor of the trend, always in favor of the location, and also in favor of the ITF price direction. Sometimes we planned against the HTF price direction in some scenarios. And also we learned location or curve doesn't play any importance when HTF price direction and ITF price direction both are in our favor. That is the first row. Demand zone to supply zone, ITF also demand zone to supply zone. In that situation, location doesn't give any importance. That means either low on the curve or equilibrium or high on the curve, anywhere you accept the trade. Once the location HTF direction is changed, the scenario is changed. Now location plays the role. High on the curve, you cannot plan long trades, even though trend and ITF price direction are in our favor. So this is the very, very important table, decision making table. And this table itself will filter many of your trades, whether that should be accepted or not accepted to select for your long trades. A few more concepts you will be learning after this. And after that, those concepts also supports. Then finally, your trades will be accepted. Hope this information is useful to you. Now let us discuss about bearish trade setup. The bearish trade setup, let us discuss in the second part of this video. So far we discussed bullish trade setup, all the scenarios related to the bearish trade setup, because I don't want to mix both in a single video, because you need to take some break after completing the bullish trade setup. Again, bearish trade setup with fresh mind, you understand all the scenarios so that there won't be any confusion. So let us all meet again in the second part of this video. Hope this information is useful to you. Let us meet again in the second part of this video. Thank you.